Hey everyone, welcome back to another episode of the Meet Kevin Show. Today we have the honor of being here with Gary Black in Gary Black's office, the Future Fund ETF. Thank you so much for
Kevin.
inviting me into your office.
Thanks for coming out.
So we have to start with the elephant in the room. When are we getting stimulus checks again?
Hopefully not.
A lot of people are talking about that. And I do want to start about the recession, and we'll get into Tesla, of course. But a lot of people have this mindset that if the Federal Reserve stays higher for longer, that there will end up being not only no worries about the debt ceiling, but actually potentially bipartisan support for supporting maybe lower income individuals or benefits for unemployment, extended benefits again. What do you think about that?
Yeah, I guess I'm more of the camp that we're not going to have a deep recession. I think it's going to be 6 months and it'll be over. I think the Fed is smart enough to know that they already broke something. You've seen a couple banks already go under. You might see First Republic go under, which wouldn't surprise me. Mm-hmm. And at this point, I think they're going to do one and done. They'll probably raise rates in May by 25. That's next week. And then I think they're just going to sit here for a while and see what the impact is. And as you've seen with the economy today, GDP was up 1.1, not a big number. Fourth quarter was revised down to 2.6. You still see claims coming down, so there's still strength. And inflation has really retreated. If you don't look at a year rolling numbers, but look at, say, 6 month numbers, you're down to about 3% annualized inflation.
Wow.
And so I don't think that the Fed really needs to keep pushing rates up. So my bet is we're going to get to next week. They'll do 25. They'll probably signal that they're going to want to pause. And I don't know how explicit they'll be.
Yeah.
And then I think that'll be enough that the economy can kind of, and I don't want to be Goldilocks about it or Pollyannish about it, but I think we can float down to about a 0, maybe a -1 for the second half. And then it'll be over because at some point the Fed's going to start cutting rates if we're in a recession.
Right. So maybe we get, in other words, a quarter where we've towed the line at, I think what the next quarter's estimate for Q3 is maybe a 0.2, I think. And then you think maybe negative for Q4, but you're not seeing a signal that with certainty will be negative for 2 quarters in a row or more, huh?
I don't see it. And look, I talk to business owners just like you do. I'm a business owner. Yeah. Nobody can get any help. If you go out to any restaurant here in Chicago, everybody says, there's not a recession. Unemployment's the lowest it's ever been. They can't get help. And so at this point, we clearly are not in a recession now, okay? The question is the Fed going to be smart enough to stop before it breaks something else? And I think, look, they're smart people. They've got a lot of research. They got a lot of data. I think they're going to basically say, things are slowing. The banks are not in a great situation right now because you still have deposits being disintermediated because people can put money into a treasury bond or money market fund and earn 200 basis points more than they're earning in their savings accounts.
Right.
And I think the Fed is going to be smart enough to say we can't keep pushing rates, especially if inflation is really coming down, which to me, I think the bigger risk is deflation than inflation right now from where we are.
But some people, though, they talk about, well, what if we have a wage price spiral? I mean, if Walmart's raising wages or Starbucks or Chipotle, if they keep having these margins and they're able to pass on these prices like we saw in the Chipotle earnings or the Nestle earnings, isn't that a risk that if the Fed pauses too soon, people try to see through this tighter period, start spending even more again, and just reignite inflation?
It's a risk. It's a risk. And look, we follow all the consumer names. We own Chipotle. It's our 3rd largest position. And they passed through 9% pricing last year.
Yeah.
And you look at Coke, Pepsi, McDonald's, Starbucks, they're Nestle. They're all pushing through pricing. So that is the risk. Yeah. But I still believe at the end of the day, if the economy starts slowing dramatically, and I'm not smart enough, nobody's smart enough to know how bad it's going to be in a second or third quarter. But we did have, as you pointed out before, we had 2 quarters last year of negative growth. Small numbers, like -1 or so.
Yeah.
But I do think that that's going to cause the Fed to say, you know what, let's hold off, let's wait, because they have a Fed meeting next week and then they have another one in June. And the big question is, what are they going to do in June? Are they going to raise rates again? Are they going to say, let's hold and see what the impact is? And if the economy is truly slowing, which again, first quarter slowed to 1.1, down from 2.6 in the fourth quarter, will the Fed say, you know what, it doesn't make sense for us to raise again. Let us just sit. Let's assess the impact. And can they navigate the so-called soft landing where GDP doesn't, go that negative? I think everybody's which is scary. Everybody's kind of in agreement we'll have some sort of recession.
Right.
I just don't think it's going to be that deep, and I don't think it's going to be that long, because I do think the Fed will start cutting rates later this year.
Okay, so you are in Fed cut camp.
Yeah.
Okay.
Because the economy is going to slow, and it will go negative at some point this year. I believe.
So
that.
you do think we are going to trend towards negative? It's coming.
Right. So when I look at, you can look at CPI, X food and energy. You can look at the PCE, which the Fed likes. We'll get a March number tomorrow. But the PC, if you just look at the last 6 months, it's about 3. It's not a huge number. It's not. That's why I don't like this look back of let's look back a whole year.
Sure.
Because you're basically dealing with the ramification of what happened in COVID, where the Fed was stimulating so much, and the money supply was growing so much, and there was all this stimulus going on. You couldn't help but have inflation. But since that time, you see a lot of people looking at M2. M2 is for the first time in, I guess it's 90 years, is declining. Yeah. But if you average it, as you've pointed out, and others have pointed out, you average what happened the last year with today. Yeah. It's normalization. It's not really that bad when you think about it that way.
Now, would you say that when we look at inflation, there's potentially this risk that we'll see that goods deflation, inventories have built up so heavily, freight is supposed to be in a recession already, that if the Fed senses stickiness in services, the restaurants, hotel, stickiness, in other words, prices, businesses like restaurants, the Chipotles, hotels being able to continue to raise prices, do you think they would hike us further into a recession just for that part, the travel and the hotel and the food that seems to be so sticky right now?
I don't think so, because rents and home prices, which are still the biggest part of CPI, are coming down, and we don't know how quickly they're going to come down in the next 6 months. So you could see the consumer packaged goods makers raising prices because their costs are going up. But this better than me. You buy homes. Oh. You see home prices coming down pretty sharply, and rents are starting to come down. So I think that's going to be the bigger factor. Yeah, there's a big debate about are investors being dumb here, or are they smart? And it's I don't have a crystal ball like Elon says he doesn't have a crystal ball. Yeah. But I do believe that the Fed will cut rates, and I do believe, while we're not in recession today, if the Fed keeps pushing rates up, because you have some companies, as you say, they're being sticky about prices, they keep raising them, we will have a recession. But I don't think the Fed's that dumb. I think they'll stop. If
we have that even shallow recession, why not wait until then? I mean, won't stocks bottom closer to the recession?
Usually. And so, when I look at stocks today, I see a 3.5% 10-year Treasury. The PE on the S&P is about, let's call it, 17, 18 on next year's earnings. So if you look at what I call the E over P ratio versus 10-year Treasury, stocks are still offering about 200 basis points of extra. And if you look at that historically, that's a big spread. So to me, stocks are
more downside then.
Well, I look at it as stocks are pretty cheap.
Oh, really? Okay.
Relative to the 10-year Treasury.
The earnings risk premium so small, though, or you still think the 200 is still high right now?
200's a high number.
Okay. So risk premium still high right now. Doesn't that signal, though, if we go into a recession, that should spread down and tighten?
If we go into a recession, you can see earnings come down a lot, and so that's the risk. But I go back to, I just don't see a high risk of a deep recession. If you have a let's call it a 1 to 2% GDP decline, and it lasts for 6 months, you're not going to see earnings revisions that are that dramatic. So I still think that the market's still relatively cheap.
Okay.
But if you're trying to time the market and you're getting in and you're getting out based on what the Fed's doing, it's hard to do that, as you and I know. That's why you have to stay fully invested, unless you think there's a calamity coming where we're going to have like a really deep recession, like 78, 79, or I wouldn't call the COVID recession a deep recession. It was over in
30 days.
Yeah, 30 days literally.
Yeah.
But if you believe we're going into a 1930s type depression, you pull your money out. But I don't see that.
It's interesting. 30 days to slow the spread was really 30 days to slow the declining stock market.
Right.
So then what percentage of a downside do you see? I mean, if you had a diversified portfolio now, or you were in the SPY or the NASDAQ, technologies, would you be thinking, okay, maybe if you invest now for the long term, you got a 10, 20% downside, or are we facing potentially a 50 to 80% downside?
No, because you're not going to have a deep recession. The Fed is going to stop before things get too bad. So I could see another 10 to 15% downside from here.
Okay.
But remember, the markets are up this year. So we've had a good year.
So you got a buffer.
Yeah. Well, last year wasn't great, as you and I know. But this year I could see a 10 to 15% decline going into recession. But what you've normally found is once the Fed pauses and people conclude that there's no more rate hikes, then people start discounting that the Fed's going to cut. And so the question is, if they signal they're going to wait, they're going to raise rates in May, and then they signal we're not going to one and done. We're going to wait a while and see what the impact of this is, and then people will start anticipating they're going to cut. The next move is a cut, and that's usually the time you want to be in the equity. You want to be in equities
when the Fed is cutting and back to expanding the money supply.
Yeah, because they're signaling that the next move is no more going to be an increase. It's going to be decline. And I don't think they're going to signal that. I think they're just going to signal they're going to pause next week.
Oh, so you wouldn't wait for that sort of pivot, so to speak. You would want to be in before that because of their signaling today.
And we're all in right now. I mean, we keep our ETF, pretty much, maybe 96% invested. We'll always keep a buffer of cash just to have it so we could buy something if it's down a lot and we really like the name. Yeah. But we're not bearish about the economy, and we're not that bearish about stocks because again, when I look at E over P relative to the risk-free rate, I still have a big spread, meaning equity still looks cheap to me relative to the history.
Now, Kevin O'Leary, I spoke with him yesterday. He's at 30% cash right now. Do you think that's wild? Is that a big opportunity cost?
It's probably because he believes we're going to have a deeper recession than I do. I don't know if the Fed is as stupid as everybody thinks they are. They have been stupid.
Sure.
But
they were printing in March of 2022.
Yeah, they were printing cash like there was no tomorrow because of COVID. And then, they've been fighting this boogeyman of inflation, which was caused by all this money printing from 2020 and all this excess stimulus from the government.
Yeah.
But when you average it, you say, okay, I've got inflation of, let's call it 6, and now, the marginal inflation, as I call it, so take the monthly and then multiply it by 12 of 1 or 2. You're kind of back to the norm of 2 to 3. And so I don't know if that's something the Fed thinks about, but I do believe they're going to stop doing what they've been doing, which is hiking rates every month.
Yeah, I find it fascinating. After the 82 Paul Volckering, the rugging, it seems like the Fed took this path, and they even said it, of opportunistic disinflation, where they would just let inflation run a little hotter. They'd just be at 9 and 8 and just slowly wait over time as it went. They took 20, 30 years to get it down to 2%. Why doesn't Jerome Powell just do that? I mean, why not just be okay with 3 to 4 for a little bit, let things keep expanding?
Unless he doesn't want inflation expectations to get into people's, psyche, where they're, to your point from before, they're going to their employer and saying, I want a 3.5% or 4% raise.
Yeah.
I think he doesn't want that inflation expectation, which right now, let's call it 2.5 to 3, to gravitate up into the mid 3s, because then people are then you do have a wage price type spiral risk, where employees, which again, there's no unemployment right now, they can say, hey, you want to keep me, you got to pay me more. You got to pay me 3.5%, 4%.
Peter Schiff had this idea that everybody, like economists and analysts, and I do as well, we look at these inflation expectations, whether it's the 5-year break-evens or the University of Michigan surveys. Peter Schiff had this response to me. He said, Kevin, nobody, when they go out and actually buy stuff, thinks about inflation expectations. They're like, can I buy this or not?
It's in your psyche.
It's just meant deep in there.
It's
you don't even know it's there.
You don't know it's there. You're just thinking about it. And I see it here, our rent, this where our offices are, it's about 90% full. It used to be, when we first started renting here, it was like 30% full.
Oh, wow. Okay.
But,
so
you
were early.
our lease is up, and they wanted a 7% bump in the rent. I said, you're out of your freaking minds. I mean, there's vacancies all over the city.
Yeah, in office real estate. Yeah.
So they try, but then, people have got to say, in my mind, I'm not paying that. But again, if I'm an employee, and I know that, everybody's begging for me to come work for them because nobody can get help.
Right.
You might be in this mindset because your inflation expectation, whether you can quantify it or not, is higher now. You might say you want a higher increase in order to stay put.
Yeah.
I don't know. I don't see that's happened yet.
Okay.
But we'll see in the next 6 months.
I guess so. So you have, I guess now would be a perfect time to bring up then Tesla. If the economy's,
Do we have to? No, I'm only
I know,
kidding.
do we have to? If the economy's not going to do so horribly, you did just cut a little bit of your Tesla position after a price drop right before earnings. Good job. Your thought, I mean, is this something you would look at increasing your position or exposure to again in the future? Or is this, you know what, we're going to keep it here and see if it grows?
Look, when I look at positions, and especially at the top of the portfolio, because as you know, that's what drives your performance.
Sure.
We always look at probability weighted upside downside. And so before, I could calculate the downside, right? Because I thought, the odds of them bringing their gross margins below 20% were very, very low.
Yeah, they even said that in their first or their Q4 earnings call.
But now I don't know, because, and it's not like Elon is saying that we're going to bring margins down to zero. He's saying, technically we could, and we're the only company in the industry that could do that. Yeah. And he's got a lot of margin to play with, but they've already brought their margins down from where they were leading the industry to now they're the average.
Oh, really?
Yeah, they're average now. And, there's reports out there. There's one from Bernstein that posted, and I actually posted this table on Twitter, where, they're at 19 gross margin in the first quarter. We're looking at it bottoming out about 16 or so.
Wow. You think it'll get close to that 15 handle?
Because they took prices down again.
Yeah, well, that's true.
So I'm using 16 for second quarter.
Okay.
And, earnings estimates have come down since they took this last price hike, which was right before earnings. Earnings estimates have come down about 11% for this year, about 10% for next year, 2024. And so that's why the stock has fallen.
Sure.
Stock falls with earnings. And people haven't really taken the multiple down. There's not been a re-rating of the multiple, although they could have said, well, now that margins are going down, and interestingly enough, you haven't seen volume estimates go up. We haven't taken our volume estimates up,
right?
Which, in theory, if there's a good elasticity of demand,
price down, volume up.
But nobody's taken estimates of volume up.
No.
So, which is kind of an interesting phenomenon. Which I would, love to ask Elon that question: why people aren't, and why they didn't take up their volume forecast.
That's true. They kept it at about 1.8.
1.8.
Yeah.
So, back to why we took it down, we just look at upside downside, and we just thought there was a lot more downside than before, because, margins could be, gross margins could be 16, but they could be 10, they could be 5.
Yeah.
We just don't know. And what I'm interested to see is, what are competitors going to do with their gross margins over the next 3 to 6 months? Are they going to follow Tesla down? And does Elon want them? Because that makes, especially on EVs, that makes EVs more affordable en masse, right? And the whole industry is staying down. So EV adoption, in theory, should go higher. Or do they, as most of them seem to be indicating, say, we're gonna try to hold the line on prices and keep our margins where they are? And I think they'll probably do the latter. And then the question is, will Tesla gain market share when everybody else is holding their prices where they are? And Elon's down, 15 to 25% in prices since the beginning of the year. And so far, what I've seen is you get this, and I call it a sugar high. You get some volume increase when you first announce a price hike, because everybody who's looking at a Tesla says, wow. And I see it, because I always pretend I'm looking to buy a Tesla. I have the Tesla store here on Rush Street. Hopefully they're not watching this. They always call me up, say, we just took prices down again. And the question is, are you getting people new who were not going to buy a Tesla, but they were thinking about buying a Tesla, and then they pulled the trigger because now the price is lower, it's on sale. And of course, you got the media screaming Tesla has taken 6 price declines, even though they've taken 3.
Right.
And so I don't see volumes really responding that much to the price hikes, because I think you get the short-term sugar high, you accelerate people who are going to buy a Tesla anyway, as opposed to what you want are the people who are driving ICE vehicles,
transitioning,
old, traditional, and saying, you know what, I want to buy an EV now, whether it be a Tesla or a Mach-E or a ID4, whatever it is, because Tesla's going to get its fair share. In the US, they're going to get 60%. Globally, they're going to get 20%. And so I wish what they would do is, rather than use pricing, which is a short-term tool, it does drive volume in a very short term. But then, and you heard Elon on the first quarter, he said, well, orders are coming at twice the rate of production.
Right.
Well, that didn't happen by the end of the quarter.
That's
so
true.
Something changed.
Sure.
And I think you're going to see the same thing in this quarter, because when you announce a price cut, you get a lot of news. People go into the store, they buy, but then for some people, you're pulling volume forward, and there still is this effect where people are still waiting for a further price cut, because they've heard the media say it's the 6th price cut that Tesla has taken this year. Well, let's just wait for the 7th one or the 8th one or whatever it is.
I wonder, is it possible that you could have people who say, well, if prices are trending down, I'll wait. What you're actually creating are negative inflation expectations for Tesla vehicle prices, right?
I know.
And in theory, when the time comes that the Federal Reserve begins to cut, and we start seeing interest rates trend down, perhaps people might have this impression that, oh, it's the bottom, and we've now pent up a lot of that demand. Could we go back to wait lists, or would that be unimaginable?
We could. And so the biggest question I get from people, and I talk to a lot of institutions, and I talk to retail people on Twitter, but the institutional community, probably the single biggest question is, why is the elasticity of demand for Tesla so low? Why is it? Can you give us a reason? And I've tried to list, 4 or 5 reasons that I think it is. One is just, the early adopters who wanted to be climate friendly, green, whatever you want to call it, make a statement to their neighbors. Hey,
or self-driving, whatever, maybe.
I'm favoring the environment. They've bought. And, now what you got to do is get the people who, they have the money, but they're afraid they're going to run out of charge. And I hear that all the time. So that when you see these surveys about why don't you buy an EV, number one is cost, which is a perception issue because operating costs are lower.
Yeah, very low.
You don't have to, fill it up with gas or oil, and your maintenance is lower. And
I don't think people go back. Once they're in an EV, I can't imagine.
No, you don't go back. Yeah. Once you go EV, you stay EV. But the number 2 reason is because of fear of range anxiety. They're afraid they're going to run out. Yeah. And I think what this is my view, and I know it's controversial, but rather than cut Model Y, which is it's going to be the best-selling car in the world this year, rather than cut that by another $1,000, so the bottom price now is $46,900. That's the standard range. The long range is $49,900. Rather than cut that by another $1,000, that costs Tesla $500 million. Spend $50 million and educate the non-EV users of why EVs are better than
advertising,
traditional.
In other words.
We'll call it education. I know advertising is a dirty word or a bad word, but let's call it education. And again, I think what they could do is they could talk about lower operating cost. They could talk about, we'll call it near autonomy, because FSD doesn't allow you to just curl up in the back seat and read a book or play a video game. We'll call it near autonomy. Yeah. The idea of not having to go to a gas station, which stinks, it's smelly, it's dirty. In most states, including this one, you have to pump your own gas.
Yeah, sure.
And to be able to just go to your garage and plug it in like you plug your iPhone in, that's like a huge selling point. Resale values are much, much higher on EVs than they are traditional. And you're helping to save the planet.
Yeah, sure.
And, to me, if they just did that and went after, they can show Tesla, because Tesla's the hero of the ad. So you show Tesla's accelerating and the beauty of the Tesla. Yeah. You're going to get your fair share of anybody who decides to go EV. As you said, once you go EV, you don't go back. Yeah. So they'll get 60% share in the US and 20% around the world. And to me, that would be a worthwhile expenditure of $50 million, as opposed to, let's just use a blunt instrument called price cut and slash $500 million out of the P&L, which to me, it's like, why? You're not going to get much out of it.
Is it possible that the Model 3 will be the $25,000 car?
Yeah, it's possible.
With these price cuts.
It's interesting. When you look at, there's a lot of people who track inventories out there, and now Tesla actually has it on their website. You can go in and you can actually, build a model for tracking inventories. Oh, yeah. Model 3 is the one that seems to be struggling. Model X is struggling the most. They have the most inventory. Model S second. Model 3 is if you just look at what Model 3 inventories are doing, it's gone up pretty dramatically. Yeah. In fact, Troy Teslake, who I have a lot of respect for,
he's great.
He's on Twitter. He will say that the inventories now on Tesla are the highest they've been even before the January 12th price cuts.
Sure.
But it's not Model Y. Model Y is actually kind of rolled over a little bit. It's Model 3, it's Model S, Model X. And Model 3 is the interesting thing to me because, to your point, the starting price is $39,900. You get $7,500 EV credits. Right. You're down to $32,000. And yet it's not selling. Yeah. And so the question is why? Yeah. And so one reason is because that $39,900 is for a rear-wheel drive Model 3. And half the country, not you, but here, half the country, it still snows. So you don't want a rear-wheel drive car. You want an all-wheel drive car. And then there is no Model 3 long range. And then there's the performance. Now what's interesting about the performance, and I pointed this out the other day, Model 3 performance is now priced at $52,900.
And then you get a Y.
And Model Y is at $53,900. Yeah. So you've got a $1,000 differential for something that's clearly much bigger,
oh my gosh,
much more powerful. Why would you just spend $1,000 and get a Model Y? Yeah. So I can understand why Model X is not selling, because Model X, you don't get the $7,500 EV credit.
Right.
Price is about $40,000 more. And, you know, all the effort to cut price has been in Model Y.
Oh, yeah.
Whereas Model X, I mean, they actually increased price, I guess, a week ago by
Yeah.
$2,500.
Yeah.
So I understand why Model Y is not selling. Model 3, I don't know why Tesla is being so, we'll call it stingy on cutting price on Model 3 performance. I don't know why there's no Model 3 long range.
Yeah.
People say it's because they're revamping the Model 3. There's going to be there's this Highland project, and they're going to introduce it. Maybe that's why. And the Model 3 rear-wheel drive really should be an all-wheel drive vehicle because, again, half the country it still snows in.
Yeah,
I
but
would
that
never
would
drive
be
a rear-wheel drive vehicle.
Then again, that would be throwing in, well, unless you moved it to the front, that'd be throwing in another engine to make it all-wheel essentially, or another motor. People get mad when I say engine, electric motors.
But you have the technology. Obviously, the standard range Model Y is all-wheel drive.
Yeah.
And look, most cars today are all-wheel drive. So you got to be competitive. If you know you're going to spend $40,000 on a car,
Sure.
I think you would probably expect that it's going to be all-wheel drive.
It's going to function.
That's my view.
Yeah, exactly. Okay, so what about, I mean, Cybertruck coming up, this Project Highland, are those just hopes for Tesla?
For the bulls?
And is that why potentially you've cut some of your position? Or are you getting frustrated with Elon Musk's leadership or maybe lack thereof?
No, I think Elon is brilliant. He's a great CEO. He's a visionary, and he's brought the company to where it is. And there's always been naysayers with Elon. Elon is going to continue to drive the company forward with his great leadership. And I sometimes I come across as a complainer, which I do, but we still own 5.5% of our portfolio is in Tesla. It's our number 2 position. Chipotle actually passed it a little bit yesterday because it was up so much. But you know, we're still comfortable owning it at 5 to 6% weight. And back to your original question, would we take it back up? Maybe if the price goes down a little bit more. I mean, it continues to drift down. Today's having a nice day. But
what's the floor? What's the worst case floor you see?
I think it's 150, and I've told people that I think we're in a 150 to 200 trading range.
Okay. And not back to 100 or 69 like
unless they bring margins down to 0, which again, he has not said they're going to do that. He said technically we could, and I don't know if he was trying to send a signal to the rest of the industry
that it's coming, or
but I don't think he's going to do that. And so back to your question, we hold Tesla to the 5.5% position because of what you just said before. Cybertruck to me is the most important catalyst. I have a Cybertruck tri-motor on order. I can't wait to drive it around here in Chicago and valet, as I told people, in front of Nobu, and I'll watch it from outside, and you'll have all these crazy kids taking pictures of the damn thing because it's going to be different. It's going to be spectacular. It's going to be one of these things that when people, it's going to be a walking billboard as people see the Cybertruck in cities all over the country, and hopefully they get it out at the end of the third quarter. They're going to start deliveries. It becomes a draw to go to the Tesla website and go to the Tesla store. You may not buy a Cybertruck, but it's going to be a way to bring people to your website and bring people to your store. That's what happened with Model Y. It's an ad, exactly, and it's different and it's unique.
Oh yeah, it's
so. But I'll drive mine because to me that's like the best car truck in the world. And I've always been an SUV person. I went through my phase probably when I was my early 30s where I had 911s and sports cars, but. As you get older, it's not that you don't like speed anymore, but you like room.
Yeah,
I like having an SUV or a pickup, and I'll love just driving that thing around. My biggest worry is, will it, fit in the garage across the street where I live? I don't know. I hope it does. But I think that's a huge catalyst for the whole franchise, not just we're assuming, there's 1.3 million pre-orders. We're assuming, I think, 300,000 or 400,000 of Cybertrucks delivered next year, 2024, which may be high, but that's our assumption. And then the other big catalyst is the $25,000 EV. Back to your question, I wouldn't be bringing Model 3 down to 25 grand. I would really try to step up, bringing out, we always used to call it the Model 2. We've been talking about this for a couple of years because you expand the TAM. You increase the pie of people who can afford a Tesla. So at $25,000, you're expanding the pie by at least 40 or 50% from where you are today. And I wouldn't wait for Mexico.
Hey, quick reminder to check out my wonderful programs on building your wealth linked down below. I regularly add content to them. I go live every single day with course members providing not only my commentary, financial analysis, real estate analysis, but I answer your questions. There are multiple different avenues you can check out. You could start with the Zero to Millionaire Real Estate and the Stocks and Psychology of Money group. Phenomenal baseline knowledge to really build your wealth. Check out the Elite Hustlers course to grow your income as an entrepreneur, making sure you're negotiating those higher wages as an employee or protecting yourself as a business owner. Make sure you check out the Real Estate Agent course if you're an agent, the YouTube course if you want to build your social media following. So all of those linked down below. I would love to see you as a course member. Soon, we'll also be doing free house visits to random course members within the course, whoever wants to, and we'll be exploring what your financial journey has looked like. Check it all out, link down below.
Mexico, they're saying, it won't be ready and cranking out these $25,000 vehicles till the end of next year.
Yeah.
I would build something right now in China, and because that's where it's the most competitive for EVs.
Right.
EV share in China is up to 22%.
Get a Model 2 over there, in other words.
Yeah, and get it out so you can compete with BYD, which is super aggressive at bringing out these $20,000 to $25,000 cars. Yeah. And I'm not sure what the reason is that they can't do that. I mean, China, they got that whole plant up and running in about 9 months.
Yeah.
Why can't you get we'll call it an M2 factory, a dedicated M2 factory up in China, in 9 to 12 months? And so at least you can compete and get an affordable car out to the masses in China, which is the most competitive market in the world.
What's your price target going forward? 24, 25, long term?
Yeah, so
longer maybe.
And we've taken our numbers down, but we didn't take our out year numbers down because of Cybertruck, because of the $25,000 vehicle, because we think Tesla will be able to solve FSD at some point. We don't add robo-taxis in. We think that's foolish. But having we'll call it level 4 autonomy, FSD will sell more Teslas. It's a reason to buy a Tesla. And the question that I always have is, why are you charging $15,000 for FSD, which is adding $250 a month to your car payment if you roll it into the price, or you can lease it for $199 if you want. So to answer your question, we're using $320 as a price target, which we say over the next 12 months. And the way it's a theoretical number. And when an analyst gives you a price target, no, it's not where they think the stock's going to go in 12 months. It's based on some discounted earnings or discounted cash flow. We go out to 2030, so we take a long-term view, which is 7 years from now. Yeah. We have earnings of about $24 a share. This year earnings estimates are down to $3.50. They're down 11, 12%. Yeah. Next year, the street's at about $5.10. So we're at $24 in 2030 because we have 10 million Teslas being sold in 2030, which again, the way I do this, I look at SAR, I look at EV adoption, and I look at that dreaded Tesla EV share, which, they hate talking about, but that's the way people model.
Yeah, of course, of course.
You try to find
$24 though in 2030 at even a 20 multiple.
Well, I use 30.
So 30, so you're at 600-ish bucks. 720,
right? There it is. And then I discount it back. I use a 3.5% 10-year treasury. There's a 6% equity risk premium versus bonds. That's a 60-year average. And then we risk adjust it. Tesla's still got a 1.6 beta. Might even be higher now, but it's up there. So you basically have to risk adjust. So if I'm trying to figure out what the discount rate on Chipotle is, it's a much lower number because you don't have a 1.6 beta. You got like a 1.1 beta. Right. Or Apple, or any of the.
I think Chipotle is going to keep up this pricing that they have. I mean, when you look at being able to raise prices and still sell, yeah. But I mean, that's impressive. I mean, why would you? You're now more heavily weighted into Chipotle than Tesla.
No, we
not intentionally.
Yeah, we've kept Tesla as our number 2 position, and we actually after yesterday, you'll see this in the nice thing about ETFs, every night you can see what we do.
Transparent, yep.
When a stock is up as much as Chipotle was yesterday and it was up again today, we took our position down by about 50 basis points. But I do believe that Chipotle has great pricing power, and they continue to, if that's, let's call it, 6% a year.
Yeah.
I think the comps were 10.5 for first quarter. I think they're guiding to mid to high single digits the rest of the year, so let's call that 7.
That's great.
If you can get 6% pricing and 1% more transactions, they can do 7.
Yeah.
And if you can do 7 in comps, you can do 15% earnings growth. And then the question is, what do you pay for a 15% earnings growth or long term?
Yeah.
And so one of the jokes I made yesterday, and I posted this, was that Chipotle now has a higher PE than Tesla on 24 earnings.
Yeah, no kidding.
And, is it deserved? Probably not, because unlike Chipotle, which is getting a lot of its growth through pricing, Tesla is getting all of its growth through volume. So do the math I just said. I'm using 10 million as my forecast for 2030 units. I take SAR, which is about 85 million in 2030. I take a 60% EV adoption, and I give it what its EV share is now, which is 20%. So you take 85 times 60 times 20, you get about 10 million units, okay? And you can do it by country. You can do it US, Europe, China, rest of the world, which is the right way to do it. But I think you're going to come up with a number that's close to that. And one of the challenges is that, Elon and his team are telling people 20 million units by 2030. But I don't know how they get to that number, to be honest with you. It's
EV share growing.
You got to make, and they don't like EV share. They like total share. But, to me, you take the smallest, most measurable metric that you can find and do the research on it to figure out what, and it's got to be something you can monitor every quarter. And I can monitor EV share every single quarter. So if I have 10 million units, and then you have to make some assumptions about your average selling price, which I have mine coming down, although Cybertruck's going to bring it up, but model $25,000 vehicle is going to bring it down. And then the real question is gross margins. Do you want to take gross margins up from, if it bottoms at 16 in the second quarter, where do you want to have it be by 2030? And I'm going back to, low 20s. And then energy, which we haven't talked about, energy is going through the roof because of mega packs. I can get to $24 in earnings. So the question is, how quick is the growth rate going to be from 2030 on?
Right.
And so at this point, you're at 60% EV adoption. You only have 40% left to go. So law of large numbers, the growth has to come down. It's not like going from 10 to 60, where if you figure out the math on that over 7 years, that's about a 30% growth rate. Going from 60 to 100, you're not going to get 30% volume growth anymore.
Right.
So I bring my earnings estimate, now I'm doing back of the envelope, from 2030 on to about 15 to 20. So putting a 2 times growth rate, which is kind of what a big cap company like, an Apple or Microsoft trade at, 2 times growth, put 30 on it. That's how I get my 720, discount it back. That's how I get, to answer your question from 10 minutes ago, that's how I get $320. Chipotle, it shouldn't trade at the same multiple as Tesla because they're getting a lot of the growth through pricing. You're not getting, 30% volume growth. That's high quality growth when you're doing it through volume, right? So to me, Tesla should trade at a much higher multiple. And the reason it doesn't is because people are afraid that Elon's going to keep taking gross margin down.
Right.
And that's why I go back to it. You read what he actually said on the conference call. He didn't, and a lot of people give me grief about this, but I know this. He didn't say he was going to take the margins down. And I fight with PMs about this all day long. He said, technically, we could do it. We're the only ones who could do it. Technically, he's right. The question is, will he do it? And this is the heart of the investment question. If volumes don't respond, which I don't think they will, right? Because what we talked about, low elasticity of demand, people maybe worrying about a future recession, lots of competitors out there, ubiquity. When everybody's driving a Tesla, and you're driving through the neighborhood and dropping off your kids and everybody's doing the same thing and they have a Tesla, you may not be as likely to own a Tesla because Tesla's still an expression of how well you're doing. And if you're just doing as well as everybody else, you may not drive a Tesla. You may go back to your Porsche, especially as they're electric or something.
That's a sort of flip on this idea of, I see so many Teslas, that company must be doing well. You're actually suggesting there's this level of it could be doing too well.
Just think about it. Think about it if you had a special watch. Tesla's still a luxury good. Do you want to be wearing the same watch as everybody else? Do you want to be driving the same car as everybody else? Did you want your house to look like everybody else's? And people say, well, what about iPhone? iPhone is not. You're not expressing how you're doing in life by using an iPhone. You're using an iPhone because it's functional. It's easy. You can use it quickly. I think a Tesla is still an expression of how you see yourself doing with life, and that's why the ubiquity factor. I haven't yet figured out is it good or bad. I think it's, to me, when everybody owns it. And it's the most popular car, and you've only got 4 models. That's why you need some more models. Maybe you need 6 or 7 or 8. I just worry that without more models, your cars look too different. That's why I like the Cybertruck so much.
Yeah,
and that's
yeah,
why
yeah, that's big.
even when Cybertruck came out, there were a lot of people saying, shouldn't you make it look more like a Model Y or a Model 3?
No.
And I don't think that's true. I think having the Cybertruck look very different is the right strategy. And then, maybe for all the, we'll call them baby boomers who want a pickup truck that looks like a normal pickup truck, you bring out a more traditional looking truck once Cybertruck's out there. But I don't want them getting distracted again. I want that Cybertruck out, and I want the $25,000 vehicle out. And if, they want to bring out a traditional looking pickup truck for, people my age, let them do it then.
What about this mention that you made about quality growth being volume versus just price? Is that a way of saying, hey, just because you can raise price like a Nestle or maybe a Chipotle, that's not a way of actually growing your market share, and therefore it's not as quality? Or can you clarify that?
As an analyst,
yeah,
when you look at elements of growth, you got to decompose into volume, pricing, margin, and then I look at cash. What do you do with the cash?
Sure.
Okay.
Sure. Build more factories or dividends or whatever.
So you look at some marginal return on invested capital, and those are the components of your growth rate.
Okay.
The most high quality and most correlating with stock price performance is growth that comes from volume. People prize unit growth. When you see a company that's growing units and units can be, subs, units can be, traffic, for instance.
Like Disney subscriptions or
correct,
Google
correct.
searches.
Like subs is a normal one for, Google or, some tech company.
Sure.
But unit growth is the most prized because you can do that year after year after year. If you've got a really good position with a good moat, high entry barriers, not that much competitive intensity, all the, strategic stuff that they teach you that you're supposed to look at. Pricing is the most fragile because if you raise prices too high, at some point the consumer says, no, I'm not going to do it.
Sure, there's another option. There's a substitute.
Right. And I learned this because I used to cover the cigarette industry back in the day in 1992. And you're not old enough to remember this, but there was a time called Marlboro Friday, very famous in consumer lore. It was April 2nd of 1993. I'm dating myself. And Philip Morris, after taking prices up 8-9% a year, and the stock price would go up, they finally decided they would have to cut price because the consumer finally said no. And it was during a recession, but it was also once the price of a pack of cigarettes got above, this was way back when, $2 a pack versus the cheap generic cigarettes were like 80 cents a pack. So it was 2 versus 1. And Philip Morris took prices down, and I think everybody learned a lesson that time. You can't just raise prices at 8 or 9% a year because at some point the consumer is going to say no. And I don't know where that price point is on Chipotle. If you go into Chipotle today, your average check is above $10. And so,
well above $10 now. It's like $17 for a burrito. I don't know.
Right,
Add avocado. Oh my gosh, or the guac. Oh, they get you.
So I believe, and back to your question about quality of earnings growth, you want to find unit growth. That's why Tesla is still very compelling to me. But you got to be willing to put your neck out and say, margins aren't going to, have a downside of 10 gross margins, or you could look at operating margins too. You've got to be able, with great confidence, if it's going to be your number 2 position, say, here's the bottom of what I can see on margins. And I don't have that confidence right now because I'm not so sure what Elon's going to do. I believe he will keep margins kind of where they are now. And this then becomes a catalyst because I think he's going to realize that he's pushing a little bit on a string. That when you take Model Y, low prices now $46,900 in the US, to say $45,900, he's not going to, that doesn't drive affordability. The people who are driving Model Ys are not going to say, oh, wow, maybe I should go get one. Or the ones who wanted to buy one, that doesn't really do it that much, especially if they're saying I'm going to wait for one. What drives affordability is the $25,000 vehicle, and you've got to differentiate between the two. And even if you read Master Plan 1, 2, and now 3, when he talks about driving affordability, it's always about new products. Marketing will call them flanker products.
Sure.
Okay. So Netflix understands this. Netflix now has a tier. If you don't want to pay $15.99, or you don't even want to pay $9.99, you can pay $6.99.
Ad supported then.
And that's a flanker product. And you've seen through the history of luxury goods, and you've seen in the automotive industry. You have Mercedes and BMW have practiced it for years, where you bring a new product out. And to me, that's consistent with Master Plan 1. Master Plan 1 was Roadster to Model S, Model S to Model 3,
Yeah.
and now we're going to bring out Model 2.
Well, it's like BMW. They have the 5 and 7 series first, then they bring the 3, then they bring I think they're on the 1 series now.
Model
Exactly.
1,
Yeah. So, okay. Well, now you mentioned you don't want to include any kind of robo-taxi revenue. Brett Winton from ARK Invest was a little upset the other day on Twitter because he called it dumb not to include at least some revenue because his argument is you have to assign some probability to the fact that there will be robotaxis. And if that probability is 25%, then you should give 25% of the revenue to your number. What do you think? I mean, is robotaxi, if it happens, great, it's icing on the cake, or should you look at it that way?
I can't model it, Kevin. I can't put a number on it. And if I can't put a number, I can't put it into my valuation model.
How do they do it?
They make it up. They just assume, it's like you said, they just assume it's going to happen. But, look, we've had Elon promising robotaxi since 2019. It's next year. And he did it again on the first quarter call. He says, well, by the end of the year. And it may happen. And if we can get to the point where, and let's define what it is, you can sit in the back seat, and from a liability standpoint, you're willing to put your neck out on the line and say, we're going to be a level 4 autonomy product where we're going to assume the liability if the car crashes, right? Which I don't think Tesla's willing to do that.
No, they won't do that.
So if you're willing to put your neck out and say we're level 4 autonomy where it drives itself, and they do that, then I would be willing to put it into my model. But then you got to say, okay, who else is going to get there? And what we'll call them the Uber Bulls. The Uber Bulls will say, well, Tesla's the only one who can do it because they have a general solution that works anywhere.
Vision versus mapping, right?
Yeah, as opposed to, if you look at Cruise, you look at Waymo, they're geofenced, and I get it, and they're trying to connect their geofenced areas. But in China, that's not how it works. And you've got, 3 or 4 competitors that are all spending as much as Tesla on trying to solve autonomy.
With vision then?
With anything. I mean,
with anything.
Some use a combination of vision and LiDAR. Some use, as Tesla's doing, vision and radar. They all have HD mapping, and they're all spending a lot of money on this to try to get there.
A lot of them using NVIDIA as well to support. Like I think NEO is.
Well, that's why NVIDIA. That's one of the reasons, besides AI, that NVIDIA has done so well. But I'm not smart enough to know who's going to be the winner in 3 to 5 years when Tesla's willing to put their their liability neck on the line and say, okay, we're willing to assume the liability if this thing crashes.
Right.
Because
what about
that's what's protected them so far.
That's a good point. What about positioning though? Is it possible that today people are just very bearish on Tesla, like maybe they were about Facebook at $80? And now everybody says, well, the food ones, the staples are doing well. Like McDonald's, I think they're flat
all-time
year
high.
over year.
They're
all-time high. So I'm saying, so you got McDonald's, Chipotle, Nestle, Ulta. Some of these companies are doing absolutely phenomenal. Is it possible that this is just a partly or a lot cyclical, where people are moving into the staples because they're worried about recession? When the worry about recession goes away, they go back into tech and growth, and then these look really undervalued, like Tesla looks undervalued.
Right now, investors are pricing power. If you can show you've got PP, as you call it, you're paying extra in multiple points for that. To me, that's also a sugar high, because you can't, and I say, remember Marlboro Friday, and if you want to look at Philip Morris, ticker MO, back in the 90s, it was great. Every year they took 8 or 9% pricing. Every year they made their numbers. And in every quarter, or at the end of every year, they would buy down the inventory. And, it was all a mirage. And they finally had to pay the piper on April 2nd, 1993. That's going to happen with all these companies taking this excess pricing. You can't take 8 or 9% pricing every single year and expect the consumer is just going to stay with you. So I would say, about Tesla's definitely, on its butt, right? The sentiment on Tesla,
very low.
I've not seen it this low in a long time.
Gordon Johnson's very happy.
Yeah, he's out there.
I see him tomorrow, by the way.
Well,
what
good luck with you. I hope he doesn't, go crazy on you if you're bullish, because he's a little bit out there. And I'm not going to say anything bad about Gordon. I've known Gordon a long time, but I would just think that if Tesla can come to the realization that, hey, we've got to, if we want to grow our volume, what we need to do is convert more of the 90% who don't drive EVs in the world to choose EVs. How do we do that? We can either keep taking pricing down until the $25,000 vehicle comes out in 24, 25, or we could try educating them on why they should want an EV versus a traditional car.
Right.
And I don't think that's that hard.
So challenge question then. Who, in the short term, if let's say Chipotle has more pricing power today, who would you say has more pricing power in 10 years, Tesla versus Chipotle?
I would say Tesla does, because I think what's going to happen is Elon is going to discover how great advertising is. I mean, he's a very creative.
Oh, so what's going to happen?
I think he's going to love coming up with ads.
Will he sponsor influencers
that are witty and funny and intelligent and educational? And he's gonna get into it. I mean, I've done advertising.
You know what he should do?
He would just love doing it if he tried it.
Ryan Reynolds, Mint Mobile ads. Ryan Reynolds did all of his own in front of a green screen or whatever, super low cost production ads. But because it was Ryan Reynolds and he had some wittiness to it, people loved it. And he just sold Mint Mobile for, I want to say about $500 million. No, it might have been over $1 billion. Somewhere between $500 million to $1 billion to T-Mobile. I mean, remarkable. And he did all his own ads for it.
See, I had an idea where I would let the Tesla Twitter community, which, it's you and I both belong to it, we both have a lot of followers, just come up with a 30-second, or we'll say 60-second commercial. Maybe you come up with both. And whoever comes up with the best commercial by the Twitter, is judged by the Twitter community, gets a Tesla Plaid, Tesla S Plaid, X Plaid.
It's good motivation.
And I'm telling you, you first of all, you get great PR because everybody be fascinated by it.
Sure.
You get these intense competitive juices flowing. And then Elon and his team could pick the best one. And then, they could shoot it professionally instead of, we're doing it in, some makeshift studio. I just think I've seen CEOs, and I bet Tim Cook is like this, when they put an ad out and the ad agency comes in and they show them their work, everybody gets excited and they all, say, well, this is what this is going to accomplish, this is what that's. I think it would be really exciting for Elon to do that. And it's a very different side of him than what, the engineering side that he worries about today. But I think he would really get into it.
What about the side of Twitter? What's been your take about the Twitter ownership? Is this a distraction for Elon? Obviously we know he overpaid for Twitter. He knows that himself. It's not a secret. We knew it at the time too. That's why he wanted to back out. But I think the biggest question that looking forward now is he distracted?
I don't know. And look, it's hard to know because he's always had Boring, Neuralink, SpaceX, and he's got CEOs who run those firms. So to me, he invented those. He put the management teams in place. They are made after his likeness, for lack of a better word. Twitter is different. And Linda Yaccarino coined a phrase at this event, this advertising event. I went to Miami 2 weeks ago, and she asked Elon this: your other companies, you invented something. Twitter, you're reinventing it. And you're dealing with the cards that may not be so good, and you have to fix them as opposed to build it from scratch. And I think there's an element of truth to that. Twitter, he's gotten rid of, 70, 80% of the staff, but he's got to woo the advertisers back for this to make money from. And to your point, if he paid $44 billion, he just put a valuation of 20 on it, it's because a lot of the advertisers have not come back. And he should look to Apple and Disney, who he's mentioned, have basically stayed with him through it. So, and he brings up a good point. He says they must find it working or they wouldn't keep advertising. So, to me, and this is the number one question I got because I wandered around this conference. There were 800 advertisers there, and talked to people at dinner and talked to people during the conference. Number one question I get is, why does Elon think we should be advertising on Twitter when Tesla doesn't even believe in advertising? Because everybody knows that. Everybody knows they don't advertise.
Sure. Yeah.
And so the question is, if you can't tell people why advertising is great.
If you don't do it yourself.
You don't do it yourself. How are you going to convince these people to come back?
It's funny you say that.
So here's what I believe. I believe he'll figure out an answer for that. And I do believe, and this becomes a catalyst for me, he will realize that the price cuts are sugar high. They're not getting him much. And he will try advertising, my prediction, by the end of the year.
Wow.
And I don't know if it'll be 5 million, 10 million, 50 million, but it won't be 500 million, which is what it cost him every time he cuts prices by $1,000.
Oh, wow.
And if it's $3,000, it's $1.5 billion.
Wow.
And so I believe he will try it. And then I think he's going to get Twitter people to come back to him because he's going to discover what you and I both know, that the power of advertising is immense, especially as you go into an election year, which is next year, and you go into Olympics year.
That's true. And he's got the platform, Twitter.
He's got the platform. So I think, and it's funny because, Linda Yaccarino, when we were talking about this, he loves Twitter. You can tell it's like his baby. And as much as he complains about it, he loves being
loves
the
it.
CEO of it. So back to your question, is he distracted? I think with Twitter, he spends maybe a third of his day maybe on Twitter and maybe spends 2/3 of his day on Tesla and the other companies, but he really doesn't have to spend that much time on the other companies. He spends a lot of time on SpaceX because they're run by CEOs that he's put in place.
That's a good point.
So he's distracted a little bit, but look, the guy is a machine. He
He'll
works
figure it out.
24/7, and I don't know when he, goes on vacation or eats or sleeps or, has time for a relationship. I don't know what he does, but he seems to have time for his kids.
So what do you say about AI then? A lot of people have linked Tesla with the Dojo supercomputer and thought, okay, maybe there's an AI future. Are people just looking for too many places to try to make some money out of Tesla? Or is this whole AI thing just a fad in a bubble? What's your
I don't think it's a fad. I think metaverse is a fad, and I think, Zuckerberg is learning that. And, if you watch his tone, he's talking more about AI than he is the metaverse now.
Oh, yeah.
In the conference call, I guess it was last night.
Yeah.
I think with Tesla, they've always gotten the best engineers. They can hire great engineers. They can hire great, people who think, about autonomy and think about AI because it's Elon Musk and everybody wants to work for Elon Musk. And, it helps that they can put him in San Francisco, which is where a lot of people are in Palo Alto, which is where a lot of people want to be. So they can attract good talent. Yeah. I don't want to build like bot though into my valuation models because I can't model it because I don't know what it's going to look like and I don't know who's going to be competing with them in 4 or 5 years.
Well, I think that's such a big question too, even for companies like Google or Microsoft, is who's actually going to profit off of AI? Is it the companies that are providing the bot? Or is it every business that is using it to make their employees 20% more productive?
It's an ingredient. AI is an ingredient. So if you think about Google and Bing, I don't know anybody who uses Bing as a search engine. I mean, I just don't. I mean, maybe it's there.
Maybe recently a little more.
Maybe. And look, what's interesting is Microsoft said on their conference call that their market share went up, but they didn't give any details.
No, they didn't.
Which is
They
kind of
hid the
interesting.
detail. They were very optimistic about AI, but I think that, their company though, almost all of their segments, except for Windows OS, was up substantially. Their cloud's up like 28%. They're doing very well.
They're doing well. And I give them a lot of credit for taking a business that was kind of sleepy and nobody was that excited about. And now, people are putting a pretty high multiple on it relative to its growth, like almost 3 times, which is where Apple trades.
Yeah, that's true.
Where Google has a same PE as Meta, which I still
12, something like
17.
7, okay.
But it's only growing at 14, 15 years. So it's PE to G, which I like to look at.
Peg ratio, exactly.
Peg ratio. Yeah. It's only about 1.1, which by the way is about what Tesla's is.
It is.
So
and now Enphase.
Well, no, Enphase is still pretty high, but it's come down after its 25% decline yesterday. But with Google, I don't think you should write them off. I don't think, they could still attract great talent. They've been working on AI for years, and they don't talk about it as much as Microsoft.
They don't,
But, I still use Google all the time for search, and I don't use Bing. And so getting me to switch to Bing just because, maybe I'm going to be able to ask the
bot,
the AI driver of it something, and I may get an answer that I like. I have found when I use ChatGPT, it's not that it's that fulfilling. It's interesting. I mean, I'm sure it makes people's lives easier who are authors or songwriters or whatever, because they don't, it can give them a head start. But for somebody like me as an analyst, it doesn't help me that much. So I don't necessarily believe that Google is now suddenly dead just because Microsoft has ChatGPT. Right. I think they'll be able to figure it out and they'll be able to catch up and they'll be able to build it into their, their Google search engine, which still has 85% share. And I don't think people are going to just suddenly drop Google and go to Bing. I just don't believe that.
The banking crisis, your take. I mean, you had mentioned early on that maybe First Republic, maybe not. Is this systemic or is this just the fringe?
It's hard to know. I think if the Fed stops and says we're going to break something more, if we keep raising rates, then it can become systemic. So far, it looks like a couple banks, let's call it the handful, and I'll put FRC in there, that just had way too much leverage and too much risk relative to their uncertain deposits. And look, the challenge is if on your deposits you're paying 2 or 3% and a money market funds rate is 4 to 5%, you're going to have this risk of the outflows not being sticky or the deposits not being sticky. That said, I don't see a lot of these big banks, whether it be Wells or Citi or Bank of America or J.P. Morgan, running into trouble because they don't take the big risks that these other banks were. Silicon Valley Bank, had way too much. We'll call it, both long-term deposits that were in, treasuries and mortgages, and in loans, especially with FRC. They didn't balance their risk very well.
Right.
And the question is, do all banks do that? Do all banks have this issue?
Yeah.
I don't think so.
Yeah.
I think you would have seen more carnage out there. So
you would have already seen it, in other words.
I think so. And again, if I believe the Fed was just going to say, take rates up to 6%, right now the federal funds rate's 4.75 to 5. If they're going to go to 6 or 5.5, you could have more issues. But I don't think the Fed's that stupid. I think the fact that we've broken a couple banks, and I'm going to put FRC in the broken bank category because, at whatever, it's $5.50,
it's down
$6
90% year to date. Yeah.
It's probably going to be the same as Silicon Valley Bank, and somebody's going to take it over when it hits $1 and buy up the assets, and it'll be a great buy for them.
That's true.
As long as they can keep some of the deposits, it'll be a great franchise. They have to figure out what to do with it. So I don't see it as being systemic as long as the Fed stops its.
So say we stop. Say it's hike in May and go away. What about commercial real? Yeah, commercial real estate. I mean, isn't that supposed to be the big next Gary bubble or de-dollarization? I mean, aren't there things to be concerned about here? Or are those mostly sideshow?
Yeah, commercial loans are still not great. The growth rate is negative, and but the question is, once the Fed starts cutting rates, and the economy, let's suppose it gets to -1 in the fourth quarter, let's call it, and then once the Fed starts cutting rates, and maybe the QE starts up again, because right now it's, the QE is not there. Right now it's negative, right? I think you can start stimulating the economy again. And look, you've got an election next year, which is the other thing we haven't talked about.
Stimulus checks.
Well, I don't think Biden's going to resort to that, but there's a good chance that if it's Trump versus Biden, Biden wins again.
Not DeSantis.
I don't think DeSantis is going to get in. I don't know. Do you?
Oh, wow. It just seems like he recently fell on his face a little bit with Disney. It seems like some people on both sides are a little upset about that. And I mean, after the Trump indictment, it seems like he just shot up in the polls. I mean, polls are what polls are, but...
Anyway, during a 24 election, you don't usually see restrictive fiscal policy. It's not good for getting your candidate reelected. I don't think Biden's going to do it. You do have a split Congress now, so it's going to be hard to get anything done between now and then. But I don't think you're going to have restrictive fiscal policy. I think if anything, you'll have some sort of promise of stimulative economy. I'm not a Trump fan. I mean, I think what he did on January 6th he's going to get indicted for that somehow. Yeah. But I don't know who's going to come out of the woodwork and challenge him. It's just odd that he's still leading in the polls, and I know most Republicans don't trust him.
I think it was interesting. You just mentioned that it might come down to what somebody decides fiscally for the 2024 election. In other words, the promises that they make to the electorate. What are we willing to spend? Is it possible then we see this 2024 election cycle turn into one about who's going to do more stimulative effects?
Maybe. It depends.
Wouldn't that be bizarre?
It would be bizarre. Now, if we're in recession, when November 24 rolls around, that is a good scenario. That could happen. But again, Republicans hate the idea of,
helicopter money.
Helicopter money.
But if it gets them the election.
Maybe.
I mean, think about it. It's so interesting. I think back to Biden had won November 2020, and then we got to 2021.
You're coming out of COVID.
Biden promises, hey, I'll give you that roundup, that $2,400 stimulus check. Just elect my guy in Georgia, because they needed control of the Senate to do it, right? Yeah. And they got it. It was the night before maybe 2 nights before the election, Biden makes that promise. We're going to do the $1,400. Vote this guy in, and they
Democrats
get it.
Won.
Yeah.
You can see it, and I'm not going to deny what you're saying. There's going to be games played in 2024, so you may see a lot of stimulative, promises made in the 24 campaign, and it'll be interesting to see who's really Republican. Because again, the old adage is you run to the right, you run to the left to get the nomination, and you head toward the middle.
Yeah.
If we're in the middle of a recession, are you going to see some Republicans run to the middle?
Wow.
Because they want to promise that they can be stimulative. I don't believe that. I think it's going to be hard to get the nomination unless you're running to the right as a Republican.
Ah, okay, so further away from.
But Trump, all bets are off. He could do whatever he wants. I mean,
and he will say
he will. He could promise, dropping, all kinds of bundles of money from the helicopters. He could.
Tucker Carlson as VP.
God. Yeah, I don't even want to go with Tucker Carlson because he's look. I used to watch him. He's entertaining. I know he probably made more money on Fox than any other host, but I don't know enough about why he got fired. There's got to be something more.
There's got to be more
than what Fox is telling us, because you don't fire a guy who mints money like that unless
he wasn't.
unless there was something else that we didn't know about, and maybe there was a lawsuit, maybe there was something that just
makes me
not
wonder.
out there.
Imagine if you had a company like a Disney come in and say, "Hey, we'll sign this tens of millions of dollar advertising campaign with you if you act so and so," and then that potentially softens some of that revenue loss.
Look, advertisers by their nature are a more liberal bunch. And again, when I went to this Miami thing, I guess I know that advertisers are liberal. I just didn't realize how liberal. And when you hear people talking about brand safety, that's a big thing, big concept. And it's why they don't trust Elon on Twitter. They want to make sure if they're going to advertise their product, it's not going to be adjacent to some sort of hateful language from somebody. And so, back to what you just said, it's possible. We all watch Succession, and it's possible that, some advertisers said, hey, look, if you get rid of this guy who we worry about, we'd be much more willing to give you some advertising. Maybe it's possible.
Oh, we'll ink this contract or whatever.
It's possible.
Interesting. What about this Bud Light advertising debacle? Since you just went to an advertising conference, what does the advertising community say about how do brands position here? Do you just stay away from these sort of issues, or?
That's a tough one. I think what we've all learned over in this woke society we're in, you can't go near race, you can't go near being gay, you can't go near advocating violence of any sort, and the whole, we'll call it transgender movement. You stay away from that. You don't get in the middle of it, because it causes issues. And with Bud Light, it's a macho brand. It's for guys who are trying to not consume as many calories. It's somebody should have known better than to do what they did. It's an inconsistent. Using a transgender person is inconsistent with the brand.
It's not the audience.
And somebody should have realized it, or somebody should have questioned it. And look, I've worked in big companies before, and look, this is one of the challenges I have about Tesla. Do you surround yourself with people who tell you what you want to hear? And you would hope that somebody at Anheuser-Busch raised their hand and said, are we sure we want to be doing this?
Right.
And look, I've always had a big mouth. I've got in trouble, and I used to work at J&J with, the most, the Tylenol, the brand that hospitals favor most, and they have babies and
and baby powder,
all kinds of stuff. And so when you raise your hand and you bring up a question like that, people don't like it, And I remember, vividly, we were trying to go younger on infants, because if you could have a 6-month-old screaming but not being able to talk about and you knew they had a fever, that to the people higher up, I was a junior person at that point, that would get people's attention in the ads. And I remember saying, do you really want to be having a 6-month-old who can't talk, screaming and getting everybody, upset?
Because then people feel bad. They feel helpless.
And then the point of the ad was, when your baby is screaming, you don't want to be taking chances with a generic acetaminophen. That was a
oh wow.
That was the ad.
But isn't it all the same anyway?
Yeah, of course it is. And so, but I remember bringing up the question, and people looked at me like, what are you talking about? You don't have a right to bring that question up. And unfortunately, I think a lot of companies have this issue where, the people get to the top want loyalty first, and if somebody brings up a question that doesn't align with your strategy, and I hope this isn't true of Tesla, do those people get bounced out? And I don't know. I've not worked at Tesla. I've talked to a lot of people who used to work there, and there might be an element of truth to that. I don't know. I've never worked there.
Well, Gary, what did I miss? I mean, this has been really insightful. And make sure, of course, I want you to shout out your socials, but what did we miss?
Nothing. One thing about us is we have a long-only product, Future Fund, FFND, trades on the New York Stock Exchange. It's an active ETF. It's very active, meaning it's highly concentrated, 30 names. And we do on the ground research. As you can tell, we use the street, but we try to do our own work. We talk to customers, we talk to the company, we talk to suppliers, we talk to competitors, and that's my upbringing as a research analyst. And we're going to be launching a long short ETF. It's FFLS, 30 shorts, 30 longs. And in this choppy market that we're probably going to be in over the next 18 months, we think it's going to do really well.
Wow, when's that expected to hit?
June 1st.
June 1st, wow.
So we're getting excited about that. And, I love spending time trying to figure out, business models that are going to be disrupted or that just, aren't going to work. And, I was watching Mobileye today. I've never liked Mobileye. Stock was down like 20%. I hated Nikola when it was at $60 a share. Bed Bath Beyond. I'm thinking of all the stocks I posted on Twitter that I hated at the time.
And you could have shorted.
And people gave me, there's such a loyal following. There was such a loyal following to Bed Bath Beyond because they brought a new CEO in and people were yelling at me. And that's the challenge with a short, that you got to have balls to
do it,
to short a stock, especially if it's heavily shorted. And I remember Bed Bath Beyond was a meme type stock, and people loved it. And look, taking our Tesla position down to 5.6% or whatever it is, it's not been popular.
I've seen you defend. I mean, the amount of tweets that I've seen you respond to just trying to defend that decision. It was a lot.
There's a lot.
You had a lot of hit.
But again, when you're running a fund, it's not about looking short term. Everybody says, well, you're short term. I'm not short term. I look at things very long term. Pricing is a short term tool. Advertising has a long term ROI. When we advocate buybacks, if you do the math on a buyback, you got to look at the E over P ratio versus what they're doing with the cash.
Yeah.
And right now, it would be negative if they did a buyback from an earnings standpoint.
Sure.
So you're looking at it long term. You're looking at IRR. So when we make a decision like that, we're looking at upside downside, and we just couldn't, in good conscience for our investors, keep Tesla at a 9 or 10% weight as our biggest position when I didn't know what the downside was on gross margin. Right. Now, if I could get comfortable that 16 is it in the second quarter and it's not going to below that.
We're going up from there, maybe?
We would probably buy some.
Okay.
But we need to see some signal from management that, there is a floor and management is going to stick with the floor instead of what it in the first quarter said, well, the floor is kind of 20 and then, well, it's 19 and here's how you define the floor and it's, And
it might be 0.
Yeah, it might be 0. But I need to get some confidence or it shouldn't be my largest position. It could be, a 3 or 4%. Look, your top positions have to be the ones you have the most conviction about, or the ones you have the most upside versus downside. And if Tesla took its gross margin down to 0, and I'm not saying they will, but if they did, it's got a lot more downside than what I'm using is 150 today.
Yeah, sure.
But that's so look for that. And if folks feel that we've done a decent job trying to help them understand Tesla, and look, we try to say the positives and say the negatives. We've been mostly bullish. But there are times when we're bearish, like when they bought Bitcoin and when they brought out the yoke steering wheel, we thought that was bad because you're taking a choice out of consumers. And there's a couple other things that, even FSD, we never believed that it was going to come out a year later.
Right.
It's always been that.
They brought the choice back on the steering wheel, though.
They did. And so if you think we've added some value,
check it out.
Go to FFND and help us out.
And the ticker, so people can look this up, and to be clear, it's actively managed, which you get the actively managed tax benefits of as well, and all the others. It's ticker FFND, right?
Yeah, and we have a website. You can go to the FFND website, Future Fund website, and every night you can see the positions we have and the changes we've made. Today, you'll see that we bought some... what did we buy there? We bought some Lilly because we were talking about Manjaro.
And you sold a little Chipotle. That's
we sold a little bit of Chipotle. And, we like the idea that every night people can see what we do.
Yeah. And you respond on Twitter.
We try. Can't get to everybody. But we try to let people know what we're doing. And we try to let people know what we're doing even before we do it.
Sure.
So, people could tell that we were getting frustrated with Tesla before we took the position down. And, hopefully they'll do the right thing going forward.
Gary, this has been a blast. Thank you so much for inviting me out here to Chicago. So hello from Chicago. I should have mentioned that at the beginning, but either way, thank you so much.
Thanks, Kevin.
It was a pleasure.
Good to see you.
Thanks.
On Twitter, I love it when you interact with day trader Squawk Square.
Oh,
Do you
yeah.
have any thoughts on?
Look, there's all types on Twitter. There's people who are long-term investors who will never trade a single share. And there's people at Squawk Square, he could be long and short in the same day. And having been a hedge fund manager before, I can appreciate both sides of it. I'm more long term. I don't like to trade. We don't trade that much in our ETF, but I can appreciate there are people who think, and Squawk Square I think is pretty good at figuring out like what the stock's going to do on any given day. So I like to have a close relationship. So I like to know what's going on.
Yeah, sure.
And if it's going down, I want to know why it's going down, and I try to figure it out. And sometimes you can make money on that because if the market is wrong in blasting a stock, you want to be buying it. And so that's why I try to figure
Is Citadel rigging the market?
I don't know.
Are hedge funds, are the suits running everything? Is GME going back to the moon?
GME is definitely not going back to the moon.
We'll leave it at that one then.
And Bed Bath & Beyond is bankrupt. And look, I hope Tesla doesn't go back to 100. I hope it goes closer to 200.
But it could.
Well, we were at 156 last night. It was up $3 or $4 today, so it's probably 159. But it's still closer to my 150 than the 200. What do you think?
Yeah. I don't think we'll see another 102, but we'll see. Fingers crossed.
That was too low.
Yeah, that was too low, exactly.